Hey, Moneymakers, welcome back to another episode of Taking Stock Live. I'm your host, Kalilah Enriquez Reynolds, and we're bringing you all the latest business news and telling you how it will affect you and your money. Now, tonight we're talking about PanJam because revenues are up, profits are up, and we're going to be checking in with their CEO post the merger with Jamaica producers and finding out how they're doing and how they're doing it, how they're achieving these stellar numbers. And then later on in the Analysts, we'll be taking a look at the financial results of Did Pharma, a company I feel like we don't talk enough about. We've been trying to get them on the show for a couple of years now. So shout out to Dr. Guna Mopuri. If anybody's listening, anybody knows him, give him a nudge, tell him to come on Taking Stock. We'd love to hear more about the company. Now, before we move on, make sure you hit that like button, subscribe to this channel, and tell a friend that Taking Stock is on and popping. We're about to get into all the latest business news and telling you how it will affect you and your money. Also, leave a comment in the chat. Let me know what part of Jamaica or what part of the world you are joining us from. Now, come on, let's get this money. On this episode of Taking Stock, Pan Jamaica's profits are up a massive 60% to $6 billion. What's driving the company's success and what plans do they have to keep it going? CEO Jeffrey Hall joins us to discuss. And the analysts weigh in on the latest market developments. Did Pharma's second quarter results are out. How did they perform? We'll discuss.
But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart.
Tax Administration Jamaica says it's collected almost $19 billion through the government's Special Arrears Settlement Program. The program allowed businesses and individuals to clear their tax debts without interest, penalty, or surcharges. According to TAJ, it collected over $18.6 billion in outstanding taxes and wiped out over $6 billion of interest, penalties, and surcharges. The program ran for 4 months and saw some 10,000 taxpayers paying all or part of their principal taxes. The agency said that eventually some $30 billion in IPS will be removed from taxpayer accounts, lowering the debt on TAJ's books. JN Financial Group says the sale of JN General Insurance to BCIC is officially complete. The sale was finalized on June 6, following the transfer of the JNGI shares owned by the JN Group to its new owners. According to a statement by JN, all JNGI employees were made redundant, but most received offers to work in a similar capacity at BCIC. The company said that for now, both BCIC and JNGI will continue to operate their businesses as usual. Policyholders will not experience any change in their interactions with the companies. JNGI will eventually be rebranded as BCIC Insurance. Getty Images is facing off against AI company Stability AI in a London courtroom. It's the first major copyright trial of the generative AI industry. Stability, which is based in London, owns an AI image-making tool that generates AI artwork and photorealistic images. Getty is arguing that Stability used its photography collection to train its AI and calls it a brazen infringement of copyright. Getty's CEO said creators of intellectual property should be asked for permission before their works are fed into AI systems rather than having to opt out. The World Bank says the global economy is set for its weakest performance in nearly 2 decades. The agency is projecting global growth to slow to 2.3% in 2025. This is down from 2.8% in 2024, marking the slowest growth since the 2008 financial crisis. According to the World Bank, rising trade barriers and policy uncertainty could stifle investment and demand. It noted that new U.S. tariffs, retaliatory measures, and supply chain disruptions have amplified global trade uncertainty and slashed growth forecasts. The World Bank noted that while advanced economies like the U.S. and European Union are experiencing the brunt of the slowdown, it's the poorest nations that will suffer the most. It noted that over half of the world's low-income nations are now in or at risk of debt distress. You don't need to be a financial expert to get your money right. That's why I created the Money Mission Workbook. It's for people like you who want to finally get clear on your money, make a solid plan, manage your debt, and even start investing for the future. Everything you need is in one place. If you're ready to level up, this is where you start. Head on over to Amazon.com to buy now. The link is in my bio. Let's get this money. Welcome back. Let me shout out our viewers. Let me see who you are and where you're joining us from this evening. Ryan Wallace says, PanJam profits skyrocket. Cool. The ROK, the Rock business and the Marriott partnership raking in from the tourism industry. I bet. We got Dwight joining us from Spanish Town. We got the Diplomat says, the mission never gets sidetracked. Straight out of ATL. Chairman sending greetings to the massive. Tavares blessing up from Timbuktu. I like it. All the way in Timbuktu. A humble boss says, good night, checking in from Negril. Troyan, greetings from Capture Land. We got Levon in St. Anne. We have O'Neill in St. Thomas. Where is the police? Where is the like police? No way she is late tonight. Raquel, they're calling you out. The like police. Remember to like the video. Let me speak on her behalf. Garfield saying good night, moneymakers from Spanish Town. We got Colette checking in Kingston. Who else do we have? Quite a few people. Chris is in Panama City. Dalton is in the Cayman Islands. So let me big up all our international viewers tonight, especially those of you in the United States, the UK, and Canada. Why? Because, like you've probably been hearing and seeing all over social media, Tap Send is available to you and can help you to send money cheaply and easily and quickly to your family back home in Jamaica. And you can get $10 on your very first money transfer with Tap Send when you use the code Kalilah 10. That's Kalilah 10. And get $10 on your very first money transfer. It is no fees, fast transfers, reliable, and you can download the app from the app stores in the US, UK, and Canada only. If you're in Jamaica, it's not going to work for you. I keep telling you guys that, and like people don't really listen to instructions. You'll be like, I tried to download it and it's not working on my phone. And then I asked, where are you? Spanish Town. I said US, UK, and Canada. So use the promo code. You will get $10 on your first transfer. All right. So let me introduce our main segment for this evening. 2024 was a pretty big year for the Pan Jamaica Group. They reported massive profits or consolidated net profits of $6 billion, Jamaican dollars, that is. So we need to find out what is their secret. Joining us now to discuss is CEO Jeffrey Hall. Welcome to Taking Stock, Jeffrey.
Thank you, Kalilah, and thanks for having me, and hello to all your viewers and guests.
I can't believe this is our first time having you on this program. I feel like it's long overdue.
Well, this is the moment.
It is in the moment. So just introduce yourself. Tell our audience a bit about you personally, like how you got started in business.
You know, one of the things I think of myself as a relatively young person, although I think that's no longer true, because I took a look at there are about 106 companies on the Jamaica Stock Exchange. You probably know the number better than me, Kalilah. And I said to myself, of those 106 companies, which of them have a CEO that's currently in place that was the CEO when I became the CEO of Jamaica Producers, which I still lead as managing director. And there's only one company that had one company other than me that had a CEO in place for longer. So it's hard for me to look back, but I will.
Which company is that?
I think Keith Duncan has done it longer than me.
Okay.
So that's JMB. So I started life as a lawyer, as a banking and securities lawyer. They call it a Wall Street lawyer in New York City. So I was called to the New York bar. And this would have been in the late 1990s. And round about that time, there was a massive meltdown of the Jamaican financial sector. And the institutions that we now think of as being the base of Jamaica's financial sector, with some very notable exceptions, would have had to seek government intervention. So they were essentially bought out by the government. The government took control of these institutions. It's about 27 years ago. And I thought that this would have been a very interesting petri dish to examine, to understand the business community in Jamaica. So I took a year off from my law firm in New York, came home and never left. Started out working for the government for FinSAC, doing these deals. My boss was Patrick Hilton, who ended up going to NCB and would have probably been the third or the first longest serving had he been still in that particular role. And then went from there to doing investing with a group of friends in a private equity setting. And then roundabout 23 years ago, joined Jamaica Producers Group, which at the time would have been primarily banana business, banana and fruit processing, fruit selling business, banana farming here in Jamaica, and fruit selling in the UK. And that business, for various reasons, Kalilah, became structurally uncompetitive. So the trade rules that protected it ended, the hurricanes, Ivan, Dean, Dennis, Emily, Gustav hit, and the farming business became challenged. Mm-hmm. And so what we decided to do was to look at the things that we did reasonably well at Jamaica Producers, or that we had knowledge of, which in that time would have been something to do with food and something to do with logistics. And so with the money that we had left, we set about acquiring businesses in those two strategic segments. And one thing led to another. We got some luck and had some success and chose some good opportunities. And at the start of this era, we were losing money and would have been a very challenged business. But we got the results we sought and did well. And then most recently in 2022, reached a deal to bring together our two business segments, which would have been logistics and food, with the two business segments that we now think of as having come from Pan Jamaica, which would have been their financial services exposure and their property.
Real estate.
Yeah.
Right. I remember thinking when I heard of this merger, and I know that there have been synergies between the two companies even before the merger, but I do remember thinking, okay, PanJam, real estate finance, Jamaica Producers, food, manufacturing, what do these two have in common that would cause them to do a full-fledged merger?
Well, it's a good question. So we came together, we got to know each other because, as I had mentioned before, we were doing deals, we were buying businesses. And one of the businesses we came across was the coffee business, Mavis Bank Coffee Factory. And the government was divesting this asset. It was loss-making. The government, again, had stepped into that asset because it sought to secure the interests of the farmers in the Blue Mountains. But it was loss-making. The government wanted to get it off its balance sheet and hopefully see it succeed. And so we were putting in a bid, and Pan Jamaica, then called PanJam Investments, was putting in a bid. We think of ourselves unambiguously as operators, ourselves then being Jamaica Producers. Pan Jamaica at the time had begun to see itself as an investor or an investment partner. And so the idea was to come together rather than bidding against each other. We did that, and we had a really good success story. We bought it for about $900,000 US, so $450,000 each. Turned it around pretty quickly with the support of a great management team. Took out about $4 million of dividends over 4 years, and then sold it to another enterprise for $15 million. So we had a good story. We knew each other, we trusted each other, and we said, let's bring it together. I would say that the team that is running Pan Jamaica has an understanding of all four segments. We have a tremendous, long-standing expertise in PanJam, in property, And PanJam also had a long-standing exposure to financial services. But I mentioned to you earlier on, Kalilah, that I started life as a Wall Street lawyer and then was at FinSac and was on the board for several years of the Bank of Jamaica and was on the board of the stock exchange and had some exposure to Scotia as a director and as chairman. And so I felt that I could bring value and was relatively comfortable in the financial services space as well. So we felt we had the team to have an impact on all four segments. And I can tell you why those four segments are important to us. But
Sure.
the baseline view is that we felt comfortable in this space.
But how does it work from a logistical standpoint? Because you still operate as two different companies on the Jamaica Stock Exchange. So for trading purposes, you still have PanJam, you still have JP.
So here's how it works. PanJamaica Group, which is what it's now called, so the word investments has been removed, and we call it PanJamaica Group, really signifying that we see ourselves as active, we see ourselves as experts in the space in which we're operating, which are these four segments. And I'll say them again: specialty food, global services, which you can think of and your listeners could think of as logistics, so you can talk about what that means. Property and infrastructure, so the built environment in the city, and our exposure to Sagicor, which we call financial services. And so PanJamaica Group holds those interests directly. And PanJamaica Group has the management team, myself, Philip Armstrong, Alan Buckland, etc., at the level of the corporate office. That's our COO and our CFO. So that active presence is in the PanJamaica Group level. But the largest shareholder of the PanJamaica Group is the Jamaica Producers Group. So JP is the largest shareholder of PanJam. Is that clear?
All right. But why operate as two different entities anyway? Because just trying to understand, if you're merging, if you're creating one entity, why still trade as two different entities?
So PanJamaica is this entity that now offers shareholders a more diverse set of risks, and a set of risks that we think are really very interesting. It's what I would call, at one level, we can talk in more detail about it, an audacious bet on Jamaica. So if Jamaica does well, PanJamaica does exceptionally well. And it's also a bet on a set of activities that Jamaicans can do well and can offer globally. And we can share what those things are. Jamaica Producers Group is a special animal. I don't know if you know the history, Kalilah, but it started out in 1929, so it's almost 100 years old. And it started out with a very specific mandate. And its mandate was to act as a growers' cooperative to handle the exports of bananas globally. And so it has a fairly unique shareholder structure that still exists to this day. But importantly, JP is different from PanJam in that JP still holds a very significant block of land, making it the largest private landowner in the parish of St. Mary. And that piece of land and that set of assets in St. Mary are what JP considers its birthright. That's proprietary to JP, and that's something that JP shareholders have asked to retain control of and exposure to directly. And if you ever come to a Jamaica Producers annual general meeting, you will hear the voices of those shareholders speaking about that category of business. So that still exists within JP, that land. And that land has existed in JP for a very long period of time, and it has a vision for developing it. And it also has some treasury assets. So JP is different from PanJam in that respect.
Oh, okay.
Now you can decide which one you want to own. If you don't want exposure to that land in St. Mary, then you're a more natural PJG shareholder. But we know for sure, Kalilah, that there's some very serious shareholders that want that additional exposure. And they've had it for a long time, and we're not going to take it from them.
So let's talk about the numbers, which is what
Right.
brings us here this evening, which is pretty exciting news. So for 2024, let me take a look and get it right. Revenues were up 38% to $40 billion. And then net profits were up 63% to $6 billion. So it's been more than a year now since the merger. We're in 2025 now, merger was 2023. What's driving this growth?
Well, good question, Kalilah. So part of the story is the amalgamation itself, just mathematically, because the amalgamation took place at the end of the first quarter of 2023. So there were 9 months of 2024 that are like for like, but 3 months would have been pre-amalgamation. So that's a piece of the difference. Now, that piece doesn't really tell you the whole story, because the whole story is one of substantial, substantive growth in earnings. And you can see it in Q1, where the earnings growth continued, with Q1 earnings showing over 100% growth at the level of profit to shareholders. So something underlying the business is doing well. Frankly, we think the story is that we're getting the benefit of the consolidation, is that we're getting the benefit of diversification, is that we are attending to performance management, is that we put in place strong governance rules. Now, we have 4 divisions. The shift from 23 to 24 saw 3 of the 4 divisions showing a materially better result. So we got some significant growth in our European juice business. We saw the snack business perform better. In 24, we actually experienced Hurricane Beryl, which affected and destroyed the banana farm.
Yeah.
We concentrated and came back hard and fast. And in fact, that business is back up and running and profitable in Q1. So the food business did well. The logistics business, that business is quite interesting, Kalilah. We are active at every point along the value chain in the logistics business. So if something's coming into the Caribbean, into Jamaica, or Barbados, or St. Lucia, or St. Vincent, Dominica, we have warehouses in London, warehouses in Miami that receive cargo. So that's called the freight consolidation business. We have the freight forwarding business, which is like a travel agency for cargo. So if you want to book a container going anywhere, you can talk to us. We have a shipping line, so actually 5 vessels that we charter that carry volumes from Europe down to the Eastern Caribbean, down to Colombia, and take fresh fruit from Colombia and the Dominican Republic back up to Europe. That business did exceptionally well. Strong.
Is that exclusively for JP's products, or you ship
Not
for
at
other
all.
companies?
It doesn't ship anything from JP.
Oh, okay.
It's just a business. It's just a business. So it's a business that brings vehicles, it brings consumer goods, it brings stuff for the cruise lines in the Eastern Caribbean. It doesn't even call Jamaica directly. We can supply Jamaica by transshipment or feeder services. But it goes from Flushing in the Netherlands to Portsmouth in England, on down to the Eastern Caribbean, St. Vincent, Dominica, Antigua, St. Lucia, Barbados, etc., down to Colombia, gets fresh fruit, bananas, pineapples, avocados, melons, back up to Dominican Republic, and then off to Europe again. That business had a really strong year. Kingston Wharves, so we're moving from a shipping line to what happens when the cargo arrives in the Caribbean. Kingston Wharves, leading multi-purpose terminal. It's handling the cars that come into Jamaica. It's handling the grain, the salt, the caustic, the lumber, the steel, consumer goods, motor vehicles. 95% of the cars you see on the road in Jamaica come through us. And that business had a very strong year on the transshipment side. I would say in Jamaica, the economy led to a relatively flat year in terms of Jamaican volumes, but it overproduced in volumes on the transshipment side. So that did very well. And then Kingston Wharves has over 300,000 square feet of warehouse space that receives cargo and then releases it into the economy. So the logistics business did very well, 23 to 24, and continues to be just fine in 2025. And the property business, we took a one-off gain because we started to rationalize that business. But even if you normalize for the gain, certainly if you normalize for the gain in 2025, Q1, doing well, doing what it's supposed to do, we've concentrated the business to focus on 4 very specific clusters of assets. So our business model is a little different from some of the other property investors. Other property investors say we're going to, buy a building in Sav or a building in Port Antonio or a building in Ocho Rios or Montego Bay or Kingston. What we want to do is have a network or a cluster of assets that can strengthen each other because it's an ecosystem. If, one amenity helps the other, whether it's parking or business hotels or retail or commercial. So that network of buildings is the focus. And it performed. It did well. Occupancies are up in the mid-90s in that business. The hotel came off the ground, the Rock, started to perform. It's now doing what it's supposed to do. And as it gets some muscle memory with its guests, it's doing better and better. TripAdvisor scores are improving. We also have exposure to the Courtyard Marriott in New Kingston. And so our clusters of property are in downtown Kingston, very iconic buildings, the Scotia Center, the Rock Hotel. In New Kingston, the PanJam building, the Tourist Board building, the IBM building, etc. Courtyard Marriott investment. And
so
then
definitely landmark buildings in those areas.
And so we want to
everybody know PanJam building, Buildings.
And then the final segment is we're beginning a conversation about how should we approach Montego Bay. What's the right way to enter into that space with a similar type of cluster. That's an important step, preliminary stage.
Well, in Kingston, you're known for large buildings. In Montego Bay generally is not known for that type of infrastructure. So what's the thinking as you contemplate entering Montego Bay?
So the thinking in all, the whole narrative, any business I talk about, we're going to be talking about whether we believe we bring some expertise to the shareholders that can create value for them. So we're not just investing. We think we are going to do something that we know something about, that we've been doing for a long time. And so we think in the real estate space, we know something about retail. Think of Manor Park, where you have the signature quick serve restaurants in the country. They're there publicly so you can see them, the KFC, the Burger King, the Island Grill, the Sugar and Spice, the Krispy Kremes. I don't want to leave anybody out, but you get the picture. So we think we can bring retail into a Montego Bay setting. Then there's commercial offices where we have long had signature tenants in banking, the headquarters of the major banking institutions, major audit firms, global services providers of various kinds, government. So commercial offices is something we think we have a right to win, we can do well at. And then the final thing would be, if appropriate, I don't think that we will establish that yet, but if appropriate in our clusters, we will look at business hotels. And so that's the formula on the real estate side. The last bit, year on year in 23 to 24, which is what you asked me about, Kalilah, the financial services business had some
right.
Connected
so
to
it was still profitable, your financial services division, but those profits are down. But the profits are down. So let's hear why. What happened?
Sure. So 23 to 24, good results in the commercial banking business. Good growth in insurance revenues, 12% growth in insurance revenues. We're talking about Sagicor. But Sagicor had to make adjustments in the way it treats certain parts of its P&L, the way it accounts for certain assets and liabilities, because of IFRS 17, had to fine-tune its accounting models. And so in that period, notwithstanding the growth in revenues, we took a year-on-year reduction. That story has since normalized with the
And
Q1.
just to clarify for the viewers who may not be aware, you own 30% of Sagicor.
Correct. So 30.2% of Sagicor is an asset of the PanJam Group, and I'll tell you why we love that asset. But from 23-24, its earnings were down somewhat, but it came roaring back in Q1 of 2025 with a strong result in its insurance segment, improving story in the one you care about, which is the investment bank, and an overall good result for the business. And so the story, Kalilah, and I think I've kind of run through it because it sounds complicated and it sounds like a lot, but there's no significant one-off story. This is a performance story year over year that comes from us trying to double down on the things which we have long-standing expertise in.
All right. So speaking of the financial portfolio as well, at your recent AGM, you also announced plans to divest a mix of listed equities and funds worth about $6 billion or million? Billion. Why did you guys decide to do that?
We haven't done it yet. So we took a decision to do it. And it's all going to come across as very consistent. So to be direct, many of these assets would have been logically accumulated when PanJam would have seen itself as an investment company. So it was comfortable holding a range of marketable securities, global investment funds of various kinds. What we have observed, and you can look at the numbers, your listeners can open the annual report of Jamaica producers and look back at it, take a window of 10 or 15 years. The goal was to compound shareholders' equity, and this is net of dividends, but it becomes higher if you include dividends, of north of 15%, but it turns out to be closer to 18%. And we did it by targeting active investments in things we understand that give the promise of delivering high double-digit return to shareholders based on an acquisition return narrative. And so our goal is to harvest the relatively passive cash portfolios and redeploy those things in a track record that we think we have collectively in acquisitions in the 4 areas that we just discussed. And that's our vision. Now, the view is that these passive investments can be very valuable and can perform well. But we honestly are of the view that there may be other people, most notably Sagicor Investments, but there are others, who are in the business of managing money passively. They may not be experts in managing a banana farm or a port or a shipping line. And so we believe that that portfolio and that activity is one in which we should divest it and redeploy the proceeds in deals that we think we bring some secret sauce, something that your listeners can't do for themselves. So we've identified the assets that are not within our core segments, our core expertise segments, which we've described to you. We're being very transparent about it, or for which we do not control the timing of the cash flows, meaning that we're not in control of the dividend flows or the CapEx decisions. We're not necessarily at the boardroom table participating in those decisions. And if any investment that falls into that bucket, we will, in a very deliberate way, exit it. Now, we're not in a hurry. There's no burning deck. There's no fire alarm. This is a company that ended the year with north of 17.5 billion of cash and cash equivalents. So we're going to have the dry powder to continue to double down on the investments that we see as our focus areas.
Okay. So what is the long-term plan or the long-term vision for these 2 companies that are now 1, that are now 2, that are still 2? What is the long-term?
That bothers you, Kalilah. Why is it bothering you? Let me help you to.
I don't know. I like things simple, right? So, but what's the long-term plan for PanJam and JP?
For those who like it simple, yourself included, and I think you speak for quite a few investors who are interested in your views. Pan Jamaica Investments, or Pan Jamaica Group now, is a holding company that has 4 important business lines. And if you believe in those important business lines, then this is a place for you to put your money, and you believe in the credibility of the plan. If you also happen to like exposure to a land development opportunity in St. Mary, together those assets, then you can take the money, same money, and put it in Jamaica producers. Naturally, Kalilah, some people will note there may be some arbitrage opportunities between the two from time to time, but that's a nuance. At the headline level, they're the same thing, except that one of them is also pursuing some land development in St. Mary. Now, you have kind of two big bets, okay, Kalilah and listeners. If you are taking a long view on the future of Jamaica, and it's not a long view that is delegated to somebody else, but you want to be not just observing it, but you want to participate in it. In fact, maybe even shape it. That's who you think you are. Then you're going to have a 30% interest. So you're going to have Jamaican capital, people who have capital outside of financial services, but also real money on the ground in Jamaica, ports, buildings, being at the boardroom table in the governance of a leading financial conglomerate. So if you believe that you want to be a part of the Jamaica's future, and you're talking about the largest pension fund manager in Jamaica, so we're managing people's pension savings, largest life insurance in Jamaica, largest asset management from the standpoint of unit trusts and investment funds, leading commercial bank, general insurance, Cambio, capital markets player. So this is a leading financial conglomerate. So we believe that we have a duty to our shareholders and to Jamaica to participate in the governance of that institution and see its full potential for Jamaica. And we can give you examples of what that means to us. Property infrastructure. We want signature, iconic, well-developed, well-invested properties in this country that are significant assets. But we're also partnering with people to do infrastructure projects. So just this year, we closed on a $100 million US deal to bring 15 million gallons per day of water into Kingston, St. Andrews, St. Catherine, a bit of Clarendon, which will fundamentally change the water availability landscape in the country. That's what we want to do. We want to do more of that with partners. And our partner in this case, most directly, is EPLI, but the same Sagicor led the financing of that deal. So there's a property bit. Then an infrastructure. Then you're talking about logistics. Here we are trying to assess our position vis-a-vis the US, trying to make sure that trade serves us and that trade costs are low and that our geographic position serves us and serves the whole region. So, you can't just pull up a car ship, onto the beach. I mean, these are massive machines that carry 2,000 cars. So this is well-invested capital that allows us to participate in that business, and that serves Jamaica. Jamaica has itself identified logistics as a very important base for the growth of the country. And then, of course, there's the food business. And in both the logistics business and the food business, yes, Jamaica is important. Yes, we're the largest private employer in St. Mary in agriculture. So we're growing bananas, we're growing pineapples. The bananas that you see are quite likely to be grown by us. But we're also doing both logistics and food internationally. So you get that international exposure as well, but it's in businesses that we understand because of our history in Jamaica. So that's kind of our story, Kalilah, and we're sticking to it.
Okay, let me take a few questions from the viewers before I let you go, Jeffrey. So first we have Troyan. Troyan wants to know, can we see a higher dividend yield coming from PanJam now that the company is doing exceptionally well?
I mean, look, the board reviews dividends. So PanJam does a quarterly dividend, Troyan and Kalilah, and we'll continue to do that. Obviously, we have a view that we want, as I've expressed and been transparent about, we want to save some opportunity, something meaningful in the acquisition space. So that's important to us. But we are targeting a relatively constant percentage of profits, which can be reviewed. And so as profits grow, the short answer is dividends should grow as well.
Philip wants to know, what are the plans to develop the JP land in St. Mary?
Okay, so Kalilah, we have people who want that, or at least want to understand it. And so we basically have identified 3 prospects, which are in addition to farming. So farming is obviously at its core. So it's talking 3,500 acres. So farming will be material to that. And so we will lease the land for farming to Pan Jamaica for as long as it wishes to do that. Then now we've identified that this banana farm, lo and behold, also has beachfront property. So what we want to do is to create some low density subdivisions that are eco-friendly and relatively premium for development. Meaning we'll make the lots available for sale, but there'll be fairly prescriptive rules about how they can be developed and what aesthetics are expected. So that's 1. 2 is we want to play a role in creating some decongestion for Anata Bay and creating some commercial space that can present an alternative. You'll notice a number of so-called market towns in Jamaica are allowing for development outside of those towns on the north coast. And so we believe that the time will come for St. Mary to do that. So we want to plan that ahead of it happening. And then the third thing is we want to participate in some kind of resource-based project. We're currently doing aggregates, but certainly will be available for alternative energy, for solar, something like that. Those are the big buckets in which we see ourselves getting exposure in a very steady way. This is a long-term asset, Kalilah, and we treat it pretty sensitively. As I said, it's a meaningful asset to the community, and so we take it seriously. But the things you can hold us accountable for will be to cause that premium subdivision to exist, to cause some kind of resource-based activity to exist, and to cause a commercial center that supports the market activities of St. Mary and Anata Bay.
Well, thank you so much for joining us, Jeffrey. I appreciate you coming on and explaining what's going on with PanJam and Jamaica producers, and I wish you much success in the future.
Thank you. What is it? Let's money. Let's do money.
Let's get this money.
Let's get this money.
That's right. So we'll have you back on when you move into Montego Bay. That's Jeffrey Hall from Pan Jamaica Group. Thanks so much for him to joining us. It's time to move on to our poll question for this evening. So here's our poll question. How do you feel about Scotiabank surpassing all other banks in Jamaica to become the top mortgage broker or top mortgage lender in Jamaica? Scotia is now #1. How do you feel about Scotia surpassing everybody else except NHT, I guess, to become the top mortgage lender in Jamaica? A, that's great news for Scotia. B, NHT needs to step up its game because maybe coming for them next. C, where's the competition? Like, I want to see more competition from everybody else, from the Sagicors, the VMs, NCB, all of them. Or D, other, leave a comment. How do you feel about Scotiabank surpassing all other mortgage lenders in Jamaica to become Jamaica's #1 mortgage lender? A, that's great news for Scotia, and you're stocking up on your Scotia stocks. B, NHT needs to step up their game. C, where's the competition? We need more competition in the sector. D, other, leave a comment. So you can leave your answers in the chat, or you can take the poll on the community tab of the YouTube channel or over on X or in your email inbox tomorrow. By the way, we're still getting very low open rates on the email ever since we switched over the website to moneymediaja8.com. So if it is that you're not seeing the email in your inbox or in your spam folder, make sure you check your spam, by the way, and add us as a contact. I think that email address is info@moneymediaja8.com. Add us as a contact in your contacts list, and that should rectify the problem and get the messages back from your spam into your inbox. But if you're still not seeing it, even in your spam folder, check your promotions folder. That's another place it may be, or just try resubscribe. I don't know what's going on, but you can always go to getmoneynews.com or moneymediaja.com to resubscribe to the newsletter, and hopefully that way it gets in your inbox. We're going to take a break. Up next, we've got your market recap, and the analysts are standing by.
Time now for your market recap, brought to you by mymoneyja.com, the official data partner of Money Media. Get 10% off your subscription with the code MONEYMISSION. The JSE Combined Index lost 8,200 points last week. That's down about 2.5%. 124 stocks traded across the main and junior markets for the week ending Friday, June 13, 2025. 32 made gains, 73 lost value, and 19 stayed the same. 68 million shares changed hands on the Jamaican dollar market, valued at $542 million. PanJam was the week's most traded stock, with 12 million shares changing hands. It started the week at $3.66. Kingston Wharves traded the second most shares. It opened Monday at $31.96, and Wigton rounded out last week's most traded stocks. Now let's see who had the biggest gains. Iron Rock Insurance was the JSE's top stock, up 17% to open the week at $5. Margaritaville Turks had the second biggest gain, up 13%, and Paramount Trading rounded out the top stocks, up 11%. On the losing side now, R.A. Williams was the week's biggest loser. The stock lost 16% to start the new week at 42 cents. A.S. Bryden dipped 15% to close out the week at $25.35, and Consolidated Bakeries fell 14%. Over on the Trinidad and Tobago Stock Exchange, the composite index was mostly flat last week. CIBC Caribbean Bank was the TTSE's most traded stock. It opened Monday at $8.89 TT. The stock was also the market's top gainer, up 8%. And on the losing side, NCBFG fell 4% to open Monday at $1.90 TT. Over in the U.S., the Dow Jones was down 1% last week, while the S&P 500 dipped 0.5%, and the Nasdaq was down about 1%. At the pumps, the cost of 87 gas was up 27 cents last week, while 90 was up 21 cents. On the other hand, diesel prices rose $3.06. In foreign exchange trading, the Jamaican dollar dipped back below the 160 mark. It took an average $159.87 Jamaican to purchase $1 last Friday. That's 47 cents less than the week before. One Canadian dollar cost an average 118 Jamaican dollars. One British pound cost $216.61 Jamaican, and you could buy €1 for $187.97 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell 1% over the past 5 days, trading at $107,673 on Monday. Meanwhile, Ethereum fell 5%, trading at $2,644 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media.
Like this show? No, I mean, do you really like this show? Well, support us by making a donation on Patreon. Your support will go a long way in allowing us to continue creating content like this and keep taking stock free for everyone. Go to patreon.com/moneymediaja. The link is in the description.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart. Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. It's time now for the analyst. But before I introduce our analyst for this evening, we need to make a very important clarification about something that was said on this segment last week about Edufocal. David Rose was on, and he described the company as being technically insolvent. quote unquote. And the company is currently undergoing financial restructuring and managing financial challenges. You guys know that. We've been talking about it. And these issues have been publicly known. However, Edufocal has not been declared bankrupt or insolvent under Jamaican law, nor is it subject to any insolvency proceedings. And so it is very important to note that discrepancy and to note that point. So the reference to technical insolvency that David made was not intended to suggest that the company is legally insolvent or unable to pay its debts as they fall due. And of course, we regret any inconvenience that may have caused or any misunderstanding that may have caused. All right, so let's move on to the analyst segment for this evening. Joining us for our discussion is corporate manager at JMMB, Leovani Dillon. Welcome back, Leo.
Yeah, man. Good night, Kalilah. Good night to you, viewers. How's everybody doing?
I saw you listening keenly backstage to Jeffrey Hall, taking your notes, huh?
Yeah, I mean, anytime to hear, what leader of one of Jamaica's great institutions in terms of, firms has to say, it's a welcome opportunity. So it was good, hearing what's going on and why they have two companies listed, So that's good to hear. Mm-hmm.
Yeah, I see the viewers saying that we could have talked about them all night because it's such a massive company, indeed.
It is.
Yeah. So tonight you're looking at Indies Pharma because their revenue for the 6 months ending April 30 is up 4% and net profit is up 3%. So it's just a little uptick, but give us the breakdown on Indies, Leo.
Yeah, man. All right. So first off, since Indies is not really a regular company, so just brief overview. So the company primarily distributes pharmaceutical products. That's their main operations. So looking at the numbers, as you said, for the 6 month period, there's a marginal growth there. If you look on it for the quarter, just a quarter, you realize that there's a 10% decline in revenue and a 9% decline in profitability. Some minor fluctuations there, nothing too egregious. And I mean, overall though, if you look on the trend over time, it's been higher. So that's fine, right? Now, when you're looking at the cash flow statement, so that's a brief summary. Operating cash flow is up big time. So that's from 32 million to 407 million. The key driver of that was really just what was happening with working capital. So basically what happened is that they didn't pay out, they didn't spend as much on inventory. That was one of the main drivers for the boost in operating income there, operating cash flow, which again is very important because if you drill down further, what you realize is that the cash flow outflow from financing activities was a lot higher. So one of the major reasons for that is because of massive dividends. So they pay $180 million in dividends for the 6M period. And it's a big increase from the previous year because in the previous year they pay about 147 million. So that's also something good there for investors. Now, looking at the charts here, if you look at the recent performance of the stock, year to date is up 3%. But again, if you look at the context of the market, because we know generally in kind of bear market here, the junior market is down 10%. So that's actually a decent level of outperformance there in the stock. Now, if you look on the stock now over time, you can see the stock is not quite at the highs it was back in early 2021. However, it's been significantly higher than listing price and it's kind of been on an uptrend. So if you look on it another way, when it listed in 2018, the stock went up about 112% that year. Because it listed in August 2018. For clarification,
that was a time when all IPOs were hits, double the money in little to no
quick time. Because that was a literal double there in the span of a few months. Additionally, the month that it listed, which is the August, the stock was up 78%, and it was that mid-August that it listed. So you can see those were the good times, but
the good old days.
The good old days, right? Well, the market goes through cycles, so we're just in one of those not so good cycles. But overall, this stock has performed. 2021, it was up like 26%. So it's kind of been ebbing and flowing, but overall, it's done well for investors, right? So looking at this the other way, so when you're looking at the activity on the stock, you can see clearly an uptick in activity. Recently, 1.7, almost 1.8 million dollars traded on an average day now, which is a lot higher than it's been, going back to 2020, right? So a lot more activity, a lot more interest being picked up on the stock. We'll soon get into why that might be. Now, on a PE ratio, when looking at the PE ratio of the stock, it's a bit elevated compared to historical levels, meaning last 5 years, the average have been around 20 times, but now it's at 21 times. So it's about, it's kind of close to it. So it's not really over or under, really. It's kind of in the middle in terms of the where it's trading, in terms of a PE ratio compared to where it's historically traded, right? So there's not a wild difference there. And a similar thing can be seen when you look on it on a price to book level. Now, again, with the dividend, this company has been fairly consistent with dividend payments. So almost every year, so at least going back to 2020, you're getting the dividend payments from this company. Recently, they paid out again another big one, same 180 million as I pointed to earlier. So that's big. Now, again, this is something I touched on last time, but I want to touch on again. Why investing over time can be very important, right? So what you're seeing for the company, if you look on just cap gains over the last, since the end of 2019 to present, the stock's up around 9%, right? But if you reinvest those dividends, you're looking at 37% gain over that time, like a 28% difference. So basically, the idea here is the same. While, especially when the market's not so hot, the returns on the cap gain side can be fairly low. The reinvesting of the dividends during that time can be quite lucrative for when the bull market or when the company picks up. Now, another important thing to note with this company, recently they had a drug that they got approved for to go into the US by the US FDA. So that drug, regadenoson, sorry, that drug has a potential to do very good for them in terms of revenue and profitability. The latest I'm seeing from the companies that they expect to really see sales driven by this drug coming in the Q4 of this financial year. So yeah, so that's more like towards the, for like what, August or so, they might start seeing that. So the thing is that those numbers, as in terms of the revenue that they can drive from that, can help boost the company's revenue, profitability, and of course, again, the dividends. So that might explain some of the, more interest in the company in recent times in terms of trading activity, because again, there is some strong potential there. But you know how it goes with these things in terms of these drugs in the US. They can be, it's kind of difficult to forecast sales because there's a lot of moving parts. But it does have the potential because it's a big market that they're going in. Which has to do with like cardiovascular. So this drug could be something to watch for them in the near future in terms of the impact that it could have on the revenue and profitability.
It's very interesting. So what is the outlook for Indus Pharma? Actually, even before we get to that, you spoke about why there is this sudden interest in Indus Pharma. Why is that? What is causing that spike in the trading volumes, you think, for Indus?
Yeah, man.
Suddenly interested.
Yeah, man. So I'm thinking, looking at the timing of it, it could be around the potential that this drug can offer for them in terms of the potential for the drive revenue and profitability. Again, forecasting it is kind of difficult. All right, so if you lowball it, so based on the size of that market, if they capture about 2% of that market, it could really like double them revenue and of course stand to double them profitability. But the thing is, gauging the impact and how it's gonna, the time it's gonna take to impact that market can be difficult. So that's where the challenge lies. But it's just the size of the market and how much they need. Because again, they just need like 2%, and it's a huge game changer. And even if they get half of that, it still would significantly increase revenue and still would significantly increase profitability. But again, these things go. And I mean, I think especially now with the US market, in terms of what's happening, in terms of, the policy direction is a bit difficult to gauge. Any insight or expectations of what can unfold in the future is a bit difficult to price now. But the idea is that, look at it this way. As the company is now, they're generating good cash flows, good revenue and profitability and steady growth. This has the potential to escalate that. So it's like another notch that they can hit. As to how it's going to play out, again, that's difficult to say, but it's something that does give them the potential to do very well in the near term. So how I'd gauge it, we have the news now, and we have a timeline when we expect to start seeing this. The idea is basically to watch it closely and see how it actually pans out in terms of the actual numbers coming in. Because again, if you see, for example, let's say Q4 numbers come in really strong, right? And again, a big part of that is the drug price. The new drug being sold, like it's readily accepted in the US market, for argument's sake. Then you know that looking out into Q1, Q2, and in the future, at least the next financial year, you kind of get a gauge of what's possible, as in like a more realistic gauge, meaning you actually have numbers now on the ground and you're not, it's not just theorized anymore. You actually have numbers on the ground. Then now you can actually make a more sound forecast as to what expected. But again, you know how it is in the market. Some persons are going to position ahead of that, taking a more, speculative bet, say, this thing can have the potential to do a lot and then kind of getting ahead of that. Some persons might want to wait it out a bit, see the numbers come in and say, all right, this is more solid, and forecast it out. So for argument's sake, let's say the Q4 numbers come in and you can see a clear 150 million, for argument's sake, coming in from this drug, right? Then you can, for example, start tacking on that kind of number into Q1, Q2, Q3, and then see how that's going to impact what the company's revenue and profitability is going to look like. And then that's going to be a more solid forecast than to make that now before we actually see the sales.
How big is the US market for indies compared to their Jamaican market?
I mean, the Jamaican market, all right, so the US market is going to be bigger, but remember, they're referring to US markets is really specifically around this drug. In terms of any material shift in terms of the potential. As I was saying, 2%, if they can get 2% of the size of the market, I don't recall the size of the market off the top of my head in terms of the cardiovascular heart market in the US, particularly around this drug.
This would be their first time. This would be their first time entering the US market? Well,
in terms of getting US FDA approval, yes. Yes, in terms of getting that, definitely. I don't know if technically they have some other things in the market in terms of other products that they distribute. I don't know. To be honest, I'm not 100% sure. But in terms of getting that approval for this, that's the first time. It's the first time, definitely for them. That's the first. I can speak to that more definitively.
Sean wants to know, what about the pharmaceutical tariff that Trump is proposing? Is that going to affect them?
Again, so that's what I'm talking about. There's a lot of uncertainty there because there's a lot of proposals. So, for example, I've seen one where the idea is that any drugs coming from outside of the US, for argument's sake, manufactured outside of the US, would be tariffed aggressively, right? But again, it's a moving target, and that's the reason why I said it earlier, is that the uncertain. So, if it is imposed as announced, right? Definitely. Is it going to be? Hard to tell. Because again, as we have seen, it's not news to anybody. There's a lot of back and forth regarding these tariffs in terms of them on, then the pause for 90 days, then they're back on. So it's really difficult for me to sit here and say, I don't think it's going to happen because, at this point it's difficult to tell. But if it does, it's going to be an impact. But again, how I look at it is that as it is right now, the company is doing well. So it's not like the company needs this to, be the best thing ever in order for the company to continue to do well. It's just.
But it would be great.
But it would be great. So that's the thing. So it's a plus. So how I'm looking at it is that I kind of discounting that risk, meaning there's a chance that no fault of theirs, the market not good for them because some tariffs come in, because I think the drug is going to be manufactured out of India. So then that's gonna probably be a problem, of course, shipping that to the US market. So
So we have Ryan online giving us some stats. He says the US cardiovascular drug market was valued at $58.1 billion US in 2022 and is projected to reach $67 billion US by 2030.
Yeah. So it's a pretty big market. And again, that's always one of the upsides of one of the potential upsides for these smaller companies, is that they don't need a lot in order to to get to another level, meaning like to double or triple profits. They just need to find something that does marginal, because they just have to marginal tip. As you can see that number, they just need a fraction of that, in order to completely change in terms of the revenue and profitability of the company.
It's all about marketing. It's all about marketing. Drug companies go heavy on the marketing, courting doctors, hosting functions for them and introducing their products. So you have to see what marketing power Indies Pharma is able and willing to put behind it.
Yeah.
Targeting that sector. Thank you so much, Leo, for those updates on Indies. And if you know Dr. Mapuri or anybody from Indies, tell them we've been trying to get them on the show. We really want an update. We've never had them on Taking Stock in 5 years. So almost 6 years now. So let's put the word out. Let them know we like to have Indies Pharma on the show.
Yeah, if I see him, I'll let him know. If he doesn't already know, I'll let him. Okay?
All right, good. Thanks, Leo. Links, we got to look out for each other. That's it for the analysts. We'll come back with your comments.
This segment of Taking Stock, the Analysts, was brought to you by JMMB Group, your best interests at heart.
Graduating is a huge milestone, but what comes next? Whether you're job hunting, starting a business, or heading back to school, your finances will shape your next chapter. The Money Mission Workbook gives you the tools to make smart money moves from day one. Go to the link in my bio to get it. Let's get this money. That's right. No, you caught me dancing. Yeah. So we got the Money Mission Workbook. Go to Amazon.com and it's going to be available. So I'm not sure exactly when, but very soon in Fontana, for those of you who live here and have been asking how you can get it locally. Coming soon to Fontana, but for right now, you can get it on Amazon.com. Makes a great graduation gift. Set up that graduate in your life for future success. Perfect time to start thinking about money as you enter the real world. College students, recent high school grads, recent college grads, you start managing your own money. You need to know how. So get the Money Mission Workbook. All right, Roswell says, PanJam has a nice 30% stake in Sagicor Group. Good investment. Tavares said he was talking to oh gosh, what is our guest name again? Jeffrey Hall from PanJam. Becky had 10-to-1 split there, bossy. Tavares, these stocks are not that expensive. PanJam is trading at about $50 JMD, and JP is at, I think, $21, $22 thereabouts. You can afford that. $20 is still silver money. Come on, Tavares. They don't need a 10-to-1 stock split, not just yet. Ryan says, I love it when he says it's an ecosystem where businesses help each other. Jeffrey is smart. He was the first CEO I heard coin this investment idea. Let me see. Troyan said kind of like a Berkshire Hathaway in describing the mechanism or the system through which you have PanJam, you have Jamaica producers coming together under the investment firm. Tara said, Jaja, Kalilah, skip the stock split question. Well, I just mentioned it. I didn't ask it to Jeffrey. Philip says that I should reserve 45 minutes for the general. Yeah, so some of you were saying the interview was too short. Listen, we had him on until 8:45. Normally, I wrap the segment at about 8:30, 8:35, the latest. I try not to go beyond 8:35. He had extra time, but listen, it's a massive company. It's really two massive companies. We could sit here and talk about them all night because a lot is going on with these companies and there's a lot to report, but I think we did get something useful out of it. I liked hearing his perspectives on entering the Montego Bay market because I do think that there's a lot of room for growth on that side of the island. Natoya says, I no longer receive your emails and I've been a day one follower. Maybe only your newbies are getting the mail. Natoya, please check the spam, please check the promotions. Ever since we switched over about a month ago, our emails are not, they're still showing up as delivered. So we're still getting the delivery rate, which means that you are getting them, but you're not seeing them in your main inbox. So either they're going to spam or they're going to promotions. So just check those folders for me. And if you're still not seeing it there, then just try to resubscribe. Go to getmoneynews.com or go to moneymediaja.com and just subscribe to the newsletter again. And hopefully that solves the problem. Roswell says, Scotia dominates the mortgage market. Victoria Mutual was a leading choice. Now they have bigger competition in the building. Troyan pointing out, a couple days left for the tropical SPO, special public offer. Wonder what the take-up of the offer looks like. Because, yeah, they did extend it. I don't know. I'm excited about tropical. Like hearing Alex Melville on the show, having his two partners on from Kaya and Rose Batteries. I just like what I'm hearing from tropical. And of course, this is not investment advice. This is not a recommendation, but I'm impressed with what Tropical Battery is doing personally. Philip says, yes, US FDA approval, first ever for a Jamaican company. Big. Yes, it is huge. So Indies Pharma, we need you on the show. And then he says, India tariffs going to get squashed. Don't worry yourself. Okay, do we have any other comments? Ooh, Lanezra says, KFC is having a 2-for-1 split tomorrow. Well, if there's one place I'm going to be avoiding tomorrow is KFC, because them lines, I'm not worried about. I think it was on TikTok today, somebody posted a video of KFC today, empty. Everybody's saving their KFC money for tomorrow, apparently. Roswell says, I saw Mr. Mapuri once in Mega Mart, Montego Bay, and I greeted him. If you see him again, tell him, come on, taking stock, please. Somebody was asking what the drug does. It is a heart medication, and Philip says it's for diagnosis, not treatment. It will be marketed to hospitals and large cardiac centers primarily. Natoya wants to see a few pages of the book so we can see what's in the book. Maybe I could do a screen share. I wasn't prepared for that. Next week, Natoya. Next week I'll do that. But for now, maybe. That's the opening page. There's lots of chapters. There's lots of space to write stuff. I think this is the chapter on budgeting. That's the Build Your Budget worksheet right there. So you have lots of information. What's this chapter? Debt explained. And then about half of the book is on investing now. So when we get to mission 3, that's about halfway through the book. That's where the investing section starts. So more than half of it is on investing. And all right, let me give you the overview of the chapters, Natoya, since you want to know. So mission 1, build your budget, my money story, budgeting basics, smart money, emergency fund, money tracking, money rules, your money plan. Mission 2 is debt do-over, debt explained, interest rates, types of loans, debt to income, credit reports, credit cards, debt reduction strategies, and using debt wisely. And then the longest part of the book is on investing. The first chapter is called The World is a Cycle. And then stock market basics, understanding business news, types of offers, buying bonds, researching your investments, understanding financial statements, finding value, investing strategies, your personal investing profile. It has a couple of guides in there. So there's a company assessment guide, a fund assessment guide, an IPO assessment guide, finding your starting 5, making your first investments, investing in US markets, and investing in the Caribbean. So that's the chapter list. That's how it is structured. But you can see an overview where can you see an overview? Probably on Amazon. I'm not sure if the chapters are there. I should put that in there somewhere. Let you understand and see a little bit more about what's in the book. We're going to put it on the website on moneymissionja.com. All right, let me see. Any other questions? Chairman says he signed up for the newsletter. Great, thank you. David says he works at Indies Pharma. I'll try and let him know. See, we put it out into the world. I figure somebody is going to know. Somebody can link that up for us. So thank you, David. Let him know, please. And Ryan says if we want to talk to Jeffrey Hall, join the Did PanJam AGM when it comes up. Yeah. Whenever the next AGM is, you can get your own questions to him directly. So that's it for our show for this week. Thank you for joining us yet another week, reminding you that mymoneyja.com is the official data partner of Taking Stock, and you can get discount on your subscription using the code Money Mission. Yes, you do. Use the code Money Mission to subscribe at mymoneyja.com, the official data partner of Money Media. Reminding you as well to like the video, subscribe to the channel, share with a friend, because what? Investing is the new sexy. So let's make it cool to talk about money. I'm Kalilah, and I'll see you again next week.